when suddenly markets stop behaving the way you think they should behave, or a relationship is broken, you need to ask yourself what created that break. And in this particular case, I think what has created that break is the knowledge that we're now really getting close to the end game.
Hey guys, welcome back to Everyday Finance. In this video, Larry Lepard discusses gold and crypto according to Larry Lepard. There are some impressive charts that demonstrate the strong correlation between the price of gold and real interest rates. Imagine being able to earn a solid return on your investments in alternative options rather than relying solely on gold. After all, gold doesn't offer any significant returns. Interest, as we observed, experienced a significant increase when Powell made the decision to act as if he were a financial analyst just when he thought gold should have decreased. It defied expectations and remained steady. This unexpected turn caught his attention, hinting at something significant. It seems that there is a clue in the coal mine, and according to Larry Lepard, the reason behind it is the intelligence of gold or gold investors. They possess a keen foresight and are able to anticipate future events. Consequently, it's fascinating to observe that this is a global phenomenon, and it's worth noting that if one were to closely observe it, the US ETFs focused on gold have experienced a significant outflow of gold from US investors. Larry Lepard have been consistently selling gold in the ETF for a couple of years now, but surprisingly, the gold price hasn't shown any significant decline. It's clear that the demand from central banks, China, and the rest of the world is a significant factor to consider, especially in relation to the United States. There are approximately 300 million people, while the global population stands at around 8 billion. It is widely ingrained in people's beliefs that gold holds intrinsic value as a form of currency, and lots of things Larry Lepard discussed, so please watch the video to end and share this video, and subscribe our channel, Everyday Finance. Thanks.
It's really a great point, Tom. And I mean, I have to say, honestly, I'm a little bit shocked by it, but my understanding, the best understanding I have it is as follows. I mean, there's really fabulous charts that show that the price of gold is correlated very much to real interest rates. I mean, when you can earn a good return on a real basis in places other than gold, well, you do it. Gold doesn't pay any interest. And so, we saw real interest rates go up substantially when Powell decided to pretend like he was Volcker. And as a result of the fact, gold should have gone down and it didn't. And to me, that was a clue. It was a big canary in the coal mine kind of clue. And the reason it didn't, in my opinion, is that gold is smart, or gold investors are smart, and they can see around the corner and they know that the big print is coming. And so as a result of that, and it's also interesting, it's a worldwide phenomena. I mean, a point I'll make is that if you actually see the US ETFs in gold, they've been draining gold. I mean, US investors have been net selling gold in the ETFs for a couple of years now, and yet the gold price hasn't gone down. That's another clue. I mean, what that tells you is that demand out of the central banks and demand out of China and the rest of the world. I mean, the US is 300 million people, whatever. I mean, there are 8 billion people in the world, and it's hard coded into most people's DNA that gold is money, and it's a sound form of money that can't be debased. And by the way, the rest of the world has had a lot more experience with debasement. I mean, the U.S., has been relatively lucky, other than the Continental in 1789 and the Civil War. I mean, the U.S. really hasn't had a hyperinflation or any kind of inflation, any massive inflation except the 70s. Well, that's not entirely true. There was some after the World War II too. But the point is that the U.S. has been monetarily stable compared to the rest of the world. And, because the rest of the world, if you look at historically, there have been hyperinflations everywhere. I mean, China, you name it. The list goes on and on. So, and therefore I think people are complacent and they kind of think, well, it can't happen here. But to answer your question, I think gold smells it. And that's why I think gold, to me, it's a clue. And as Groman points out, when suddenly markets stop behaving the way you think they should behave, or a relationship is broken.
According to Larry Lepard, as any astute observer of long-term gold charts would be aware, we reached a peak of 1900 in 2011. We have encountered numerous obstacles between 2020 and the present, but we have finally overcome them decisively. We are currently approaching 2200, and Larry Lepard has high expectations for us to reach 2200, possibly even 3000 this year. Additionally, it's evident that investors and individuals alike will recognize this. It's been surprisingly quiet lately, which is another indication to him that similar breakouts have occurred in the past. It would have been widely celebrated, as Bitcoin has garnered significant attention and interest from many individuals. It's interesting to observe how the gold market has been steadily reaching new highs. It won't be long before this trend becomes more apparent to everyone. Another aspect that seems to be lacking is the resilience of the stock market. Larry Lepard has always believed that different stocks compete with each other to some extent. And based on historical data, it is evident that gold tends to perform favorably when the stock market underperforms. Let's back to the Larry Lepard interview.
You need to ask yourself what created that break. And in this particular case, I think what has created that break is the knowledge that we're now really getting close to the end game. And that, in spite of the fact that real interest rates have gone up 500 basis points as a result of Powell's actions, that doesn't matter anymore. People understand that gold is the solution. And so they're not selling their gold. In fact, they're buying more gold. And so, it's a clue in my way of seeing it. And I think it's only going to become a stronger clue as time goes on, because, we're now, anyone who looks at a long-term gold chart knows that, we touched on 1900 back in 2011. We bumped up against it a bunch of times now between 2020 and present. We just broke through it with authority. We're approaching 2200, and I fully expect us to squirt up to 2500, maybe 3000 this year. And with that, that's clear. And investors and people in general, everyone will see that. I mean, it's been amazingly quiet, and that's another clue to me that, in the past, these kinds of breakouts would have been trumpeted from the rooftops, because Bitcoin's been screaming. A lot of people have been focused over on the Bitcoin stuff. And so, the gold market has just subtly been making these new highs. And, eventually it's going to become obvious. The other piece that's kind of missing is, the stock market has still hung in there. I mean, I've always thought that gold and stocks compete with one another in a certain sense that, historically, there's a lot of data to support this, that when the stock market does not do well, gold tends to do pretty well, and vice versa. Until recently, I mean, this is another thing that surprised me in the past year. Until recently, the stock market's done pretty well, and it's done damn well. It's at, record highs. I honestly thought when we hit the peak in, 2022 that was it, that we had to put in a serious top in the stock market and the economy was going down. But as a result of the fiscal policies these guys have taken, they've managed to keep the economy marching forward, amazingly, and kept the stock market marching forward. I mean, there is a lot of liquidity out there. And so, that's been a surprise to me, but it is what it is. And it really does. And that's why, that's another argument that I make for these sound money assets. I mean, if you look at all fiat assets in the world today, there's been estimates that there's about $750 trillion of fiat assets. Let's say maybe half of that is real estate. So let's not count that. I mean, it is an investment asset, but it's not super liquid. So let's say maybe there's 350 trillion of investable assets, which I consider to be cash, stocks, and bonds. The bond market is, 100 trillion, 150 trillion. I mean, total gold market is 13 trillion today, maybe approaching 14 now. Total Bitcoin market is 1.4 trillion. I mean, it's, a tenth the size of the gold market. I mean, if any of that 350, or as a piece of that 350, and this is what I believe is going on, as a piece of that 350 starts saying to itself, I'm a little worried about, these stocks. I'm a little worried about these bonds. I'm a little worried about this cash. I'm a little worried that these governments are going to continue to misbehave. I need to buy some insurance, which is really what gold is. They're going to come after gold. And you're right. It won't take, a huge percentage change in those allocations to shove gold to much higher prices, because, unlike the supply of fiat currency, the supply of gold doesn't grow very rapidly. It's going up 1.7% a year.
Larry Lepard makes another argument for these sound financial assets. There's a certain level of uncertainty if you generate when considering the total value of fiat assets worldwide. It is estimated to be around $750. There are trillions of dollars worth of fiat assets, but let's exclude real estate from that calculation. It can be considered an investment asset, although its liquidity may not be very high. For instance, let's assume there is a total investment of around 350 trillion. He evaluates investable assets such as cash, stocks, and bonds. The bond market, with its vast size of 100 trillion to 150 trillion, is something he is not fully aware of. The total gold market is currently valued at 13 trillion and may be nearing 14 trillion. The total market value of Bitcoin is $1.4 trillion. It's just a fraction of the size of the gold market. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.